Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with the Monday stock market wrap-up for you to use on Tuesday. Anyway, let's go ahead and start it off with the New York Stock Exchange. As you can see, the NYSE had a beautiful day. If you want to say that the NYSE was in a bit of an ascending base that had a bearish wedge to it, I could say that, you know what, you had a point. I did notice that too. However, whenever you get a breakout above those highs, though, you can pretty much be sure that what's now happened here is I can get rid of those support lines and now do this. Turn this resistance area into support area. So right now, the New York Stock Exchange should find support around the opening low a day area for this index. So if it goes below it, then that means the breakout is kind of a fake out. The one good news again is that volume is above average again. Somebody told me that volume's been below average, and I guess they've been looking at the NYSE, but even if you do that since the March low, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days on above average volume. 1, 2, 3, 4, 5, 6. 6 days of above average selling volume. So the bulls are clearly in charge there. Now, let's go to the S&P 500, looking at it since the March lows. These are all the actions since the March lows. As you can see, the same thing. That resistance line that I got for you to show you there also can be drawn with my support line from here to here. Oh, man, I pressed the wrong button. From here to here, from the March lows through the April lows and through the May lows. And as you can see, it's still riding that trend line higher. And like I said, for some people that thought maybe it was an ascending base that it was setting up in, well, very good. It got to the apex. Watch here. Okay, got to the apex, and boom, breakout. Awesome. Higher volume again, so no complaints. Now, the biggest index is more important to me, even though it was only up 2.58% lagging. Look at the relative strength line. The one thing that is key to notice is volume once again was higher. Now, if anybody's telling me that volume is below average on the rally here on the NASDAQ, what are you smoking? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days of above average volume up. 2, 1, 2, 3, to 3 above average volume down days. So clearly, this NASDAQ is very bullish. Now, I think I want to go show you the IBD 185.85, but I can't do that because I don't believe the index. Yeah, those are not updated on IBD yet. Let's look at the S&P 600. Look at that, up 4.06%. That trend line holds. This trend line's holding so far. And then if you wanted to say that it was in an ascending, bearish ascending wedge pattern, it broke out higher, so you can kiss that theory goodbye, which I never subscribed to anyway. However, also, if we're going to use the previous support lines as the new resistance, you can see that the resistance is quite a far away. But right now, the 200-day moving average is the next important line in the sand. If it gets above the 200-day moving average, hooray! SP 600 is going to probably want to pull back, I would hope, to the 50-day moving average, wherever that is, and then run higher. Bottom line is, though, whenever they're more bearish than bullish in the Investors Intelligence, more bearish than bullish in the AAII survey, and bulls and bears were even this time on the Street.com survey, but the week before the bears were winning. To even know that they're only even is something. And I don't know about Market Vein, but pretty much everywhere I go, everyone's bullish. And I know AAII also has 45% cash levels, which is even higher than the 2002 and the 1997 bottom. So keep that in mind, everybody, whenever you think that stocks can't rally higher here. They sure can. Now, I'm going to go see if any of those gold, nope, not updated. So I can't show you that, so I'm going to show subscribers on part 2 and part 3 because that will be coming up tonight. Part 2 will deal with the longs and shorts, go over the IBD 100, IBD 85.85, gold, silver, platinum, and dollar index. And then video 3 will be the rest of these beautiful charts that are showing up. Guys, even if you're like me and you're long-term bearish, if you got beautiful charts setting up and breaking out there, you take them. You don't deny it. There's a stock that I'm now up 30% on, and this is where I bought it here in April, and it is now up 30%. And some people are like, oh, man, I wish I would have got that when you did. Well, why didn't you? Look at it. It was breaking out to a new high. That was a new 52-week high, bringing out to a new 52-week high on strong volume. Green bop for the first time high during the entire previous uptrend from February to April, and then it just keeps flying, pulls back on low volume, just rallying heavy volume, pulls back again on low volume, finds huge support with a massive tail intraday reversal, and now is breaking out again after it was making another ascending, well, actually we call that a symmetrical triangle pattern. Symmetrical triangle pattern, nice flag base, symmetrical flag pattern, boom, breakout higher. So now I'm up 30%, while some people are just now seeing the stock. I'm going to be taking some profits and taking some off the table. However, not that much, only about 25, 33%. The rest, I'm holding a ride, baby, because I believe Kong can go back to its old highs. It was $7, now old highs of 14, so I still believe it can double from this level and get to its old highs. It's got the momentum behind it. But there's just so many nice charts out there. The NASDAQ, another higher volume up day. Same with the NYSE S&P 500 and the S&P small cap and the S&P 400. Very, very bullish. And look, even from the lows, the S&P 400 is up 43%. Yeah, could it be very much just a bear market rally? Absolutely. Absolutely. It could very easily just be a bear market rally. I mean, look at the huge overhead resistance, we still have here. It's pretty gnarly. If we draw this trend line down through here, the highs, just connecting those highs in 2008, you can see that 2009 is still way, way, way far away from that 2000 area. So there's still a lot of work to be done, but it's looking a lot better whenever you got 30% gains in under a month, which means we got 60% on margin. So slightly under a month means that we probably got some stuff going again, and that's good. That isn't the only gainer I have. Look at our new long. Now, what am I thinking? That's for subscribers only. I'm an idiot. Okay, I'm going to go ahead and end it there. I will see everybody for video 2 and video 3, and I still got to do all my scans, so video 2 and video 3 will be up much later. Not by much later, I mean 2 to 3 hours. Okay.